EA stock. It's in the red. Really bad too. It's not good, man. In the last, I gotta go 5 days because they had close of business on Wednesday. Pretty normal. And what they do is they do earnings calls and financial calls and stuff with investors after the end of the business day, typically, or more specifically at the end of the trading day. That's typically when you would expect to see it. And you notice this is I'm gonna get like really nerdy on you guys for a second, okay? So I don't want anybody like bullying me because I'm gonna get really technical, but this is my like bread and butter. I have a degree in corporate finance, as I'm sure you've heard me say a bajillion times. So I'm gonna get really technical. This is bad. This goes down and this makes us sad, for this direction takes us deeper towards the underworld. So it's not what you want to see. It's a significant drop, okay? It's pretty standard to see a bad earnings call or maybe a bad analyst shift. Maybe you drop 2 points, 3 points, 4 is a big deal. Apple just the other day, I only know this because I hold a good amount of Apple stock in one of my retirement accounts. And so they got kind of slaughtered right here. They're down 4% over the last 5 days. They were trading up around 230 and then they had this plummet. And there's a number of reasons for it, but basically there's a handful of things. They have significantly lower expectations with iPhone sales. The Apple Intelligence thing has been a total flop. The Apple Vision Pro has been a total disaster. So you might see a 3-4% drop even with really, really bad news. To see a close to 20% drop, to me suggests a significant adjustment on the part of investors. So basically how financial analysts work with different companies is they will have a sort of directional indication, but then they'll do something called a price target. And all that is that they calculate out what they think the company is worth, and they divide that value by the number of outstanding shares. And that gives you an estimated stock price that should be fair. And so there's differences with all these, but you can see average recommendation is that it's overweight. The average target price is 150. Number of ratings 27, last quarter's earnings, outlined all of this here. Stock price targets 183 is the highest, meaning there's analysts that think that the stock is worth 183. And then the low is like 115, average is 151, current price is 118. And this can usually give you a pretty solid idea of the health of a company, but also the confidence in current leadership, which is the big and perhaps most telling thing. Because what happened with Ubisoft? Ubisoft is worth, according to most analysts, just Assassin's Creed and Rainbow Six, just those two franchises should be worth between $7 and $10 billion. Do you know their current market cap? Do you know the Muffin Man? The Muffin Man who lives on Drury Lane? Their current market cap is 1.45 billion euros. So what's happening? Why is the current value, if you add up all the shares, why is the current value of the company only 1.45 billion if their IP should be worth 7 to 10? Shouldn't that mean the company is worth at least 7 to 10? Yeah, it should. But this gap between what it should be worth and what they think it's worth is basically a discount they apply for a lack of confidence in leadership, for mismanagement, for hemorrhaging money, all sorts of different directions with projects that don't make any sense, NFT projects, all of that. And it can tell you a lot about the confidence in current leadership, the current direction of the company, and all of that. It can indicate a lot. And I mean, if you also just rewind the clocks, I mean, you can also tell in terms of the stock's trajectory, which is an actual financial term. I mean, we joke about it because you see TikTokers being like, see, this is called a bunny hop movement. When the stock drops like this, you can expect it to bounce like this, like a bunny. And it's total nonsense. But in this case, there actually is a trajectory the company's going towards, and it's down, which is bad. Again, getting a little technical here. But with EA, basically what's happened is that their entire business has been built on a few core franchises. It's been built with like FC, like all these sports games, like Madden. They print money, billions of dollars, an insane number. And that's basically what keeps a company like EA afloat. Like even when I wonder if I could actually find this on Google Maps, because I didn't believe it until I saw it myself. Where was that? I think it was San Francisco. Their campus literally has a football field. Okay. This is EA Redwood. It literally has a football field in it. Okay. That's how important the football, whatever franchise or IP, this is how important this is to their business. They literally have a football field on their campus. Nobody's playing football there, but they have it because they can. I was actually here for the Dragon Age previews. We stayed somewhere nearby, but we walked here. And so I remember walking along here and seeing the football field. And I think the Dragon Age preview was like in this building, I want to say. I think it was in this room. I don't know. It's been a minute. But yeah, they have a football field on their campus because why not? Who wouldn't, you know? Yeah, 1.9 stars. What are the reviews about? Yeah, it's about like mobile games. They can't maintain Sims 4 properly. They have single-handedly ruined several of the greatest video game franchises, FIFA, Madden, Star Wars, Battlefield, via monopolization and abusing younger generations' addictions to microtransactions. I got banned for something that's not my fault. I wrote a message to them explaining and they declined it. That's funny, they got banned. Yeah, the reviews, Google reviews for software companies never made a lot of sense to me. But anyway, so the point is their business is basically built around these core franchises, and those franchises have not actually been doing that great. So there was the revelation, of course, that we talked about yesterday, that BioWare's big project, Dragon Age, the Veilguard, they missed their estimated sales by about 50%. The wording was really, really sloppy though, because what they said was we engaged 1.5 million players. And that is a really strange way of saying we sold 1.5 million copies, right? Because I don't think that's what that means. I think we engaged 1.5 million players means that they had 150 or 1.5 million people that booted the game and played through it, or some of it. But I think that number includes returns on Steam. I think that number includes, like I gave this example the other day where I own the game, but I have like game sharing set up on my PS5. So Nikki played it on my copy of the game, but that was two people playing on one copy that sold, like one sale, right? But two players. And so I think that that's kind of how they're getting to that inflated number. So the actual miss might have been bigger than 50% because they expected 3 million. But as I've said, 3 million for a game like Dragon Age Veilguard would not have turned a profit, okay? And this is what I said for like the last month or two, was that I don't think they expected to make a profit on Dragon Age. They spent so many years making it. They restarted development so many times. I think they knew they were going to lose money. The question was how much, right? Because if I'm expecting to lose $100 on something, but then I find out I'm only going to lose 50, that outperforms expectations, right? That gets me excited. I like that. But then if I find out that I'm actually losing $150, then I'm really ticked off and I'm bummed. And that seems to be what happened with Dragon Age Veilguard, is that they expected to lose X amount, but they actually lost 1.5X. And so that's why they're really upset. But that's not, some people are saying the failure of Dragon Age caused the company to go into free fall. I don't think that that's really what's driving this based on what I've seen. What I've seen is a lot of frustration, specifically around the performance of FC. And as you can see, so where's an example of this? Yeah, they filed an 8K form, which these are public. You can just Google EA 8K forms and it's available on their website. They published their 8K form after the close, and they dropped their net booking estimations. They're going to report full earnings for the third quarter on February 4th. And specifically, they pointed to weakness in its global football division, which includes the EA Sports FC soccer games. It also flagged disappointing sales of Dragon Age. Absolutely. CEO Andrew Wilson acknowledged both titles had underperformed, adding that EA responded by delivering a comprehensive gameplay refresh earlier this month. Wall Street wasn't impressed. At least 3 analysts downgraded the stock to hold from buy after they filed their preliminary results. And that's because they expect the results of the full financials on February 4th are going to be really bad. Because if this 8K, which is just like a sort of snapshot of the company right now, if that's not looking good, the final report that gives you all the nitty gritty details that they can't really spin, that's probably not going to be that great. Yeah, Clay Griffin, who covers EA for the telecommunications, media, and technology resource house MoffettNathanson, wow, said in a note on Thursday that the underperformance of EA Sports FC should be a major worry for the publisher because the series live game mode Ultimate Team, quote, has been the heart of EA's entire business for more than a decade. And that's why people are freaking out. That's why you see this drop, because the core of their business is looking weak. And that's why people are freaking out. It's a fair reason to be worried. If your entire business is built around one core product, and that product starts to slip, you see downgrades, you see massive shifts in investor sentiment. And you even are seeing it, as I showed you earlier, with Apple, where Apple's whole business basically is built around iPhones. Like, that's a huge component, massive component of their business. And it's not doing good. Like, it's starting to see significant drops in people upgrading. The amount of time between upgrades is increasing. Apple wants you to upgrade your phone every freaking year, but they're seeing the amount of time between the average person's upgrade is increasing significantly. That's not good for them. They also aren't seeing a lot of adoption in China. They're also having trouble getting approval to start selling iPhones in Indonesia. Like, the core tenet of their business is really struggling. And so you see downgrades. For EA, the problem is that they don't have MacBooks. They don't have an app store. They don't have all this other stuff that Apple has to help their business flow. FC is like why they're a multi-billion-dollar company. And if that goes away, they're screwed. And they know it. And that's why investor sentiment is shifting. So over the next month, especially after February 4th, you're going to see them updating, all these analysts updating their estimated earnings or estimating share price. And that'll tell you really where they're landing. Because if the full earnings are really not very good, I think you're going to see further downgrades in the stock price. Because if FC is truly starting to falter and they're not going to keep up pace, the whole company doesn't work anymore. So they've got to drop it off. But all of this to say, people who are trying to make this out like Veilguard is, Veilguard did badly, therefore EA's stock is plunging. If you actually read what analysts are saying, the guys that are making multi-billion-dollar trades on these companies, what they're saying is the real cause for panic is FC, because that's the core of their business. Did Apple's failure of the Vision Pro, did that really cause much trouble for their business? Not really. If they had an iPhone that flops, that would be a big problem. So, Veilguard, without a doubt, a train wreck, but Veilguard is not the main reason you're seeing this 18% drop, okay? Veilguard, maybe, if FC was doing okay, you might see a 1 to 2% drop because of Veilguard, because oh, bummer, we missed out on 1.5 million units. But I don't think investors really expected Dragon Age to turn a profit either. I think FC is what's causing them to freak out. He took my thing. Red flag, red flag.